So let's talk now about the India's wealth shift that is happening, middle class on the rise. Let's look at some data points here. So, of course, please do like and share these videos and subscribe to the channel before we move ahead. I'll wait for 2 seconds for you to do that. Yeah. So, did you know that India's middle class is expected to grow by 500 million in the next decade? This is a data point that actually has been forecasted. And these numbers that are there, actually, it is very difficult to absorb these numbers because they are so large. I mean, 50 crore folks will move into the middle class in the next decade. And that will have so much of ramifications on everything, on consumption, on housing, everything that you can think of is going to get impacted hugely. This is the last 40 years how the mix has changed. So this is as per a study done earlier. So 1985, 93% were classified as poor people in India. 6% were, uh, 93 were poorest, 6% were poor, and then very small middle class, upper middle class, and rich people were there. By 1995, you had just 2% classified as the top three segments. By 2005, almost 4%. And by 2015, it was a healthy 20% nearly of rich upper middle class and middle class. And by 2025, now it is estimated to be nearly 41%. So this is the biggest change that is happening in the last decade, where from 78% of poor and poorest, we are coming down to almost 58%. And these numbers, as the population is also increasing, the percentage numbers also make a big difference. And that is very evident is in also in internet penetration. I mean, we are seeing internet penetration go from 13% to 52%. As infrastructure and internet reaches people, trade starts to happen. Digital transactions has been a huge story, as you all know. We have now gone from virtually 2000 crore in volume in digital payments to perhaps 25,000 crores in 24-25. And if we also see, the consumption patterns of a digitally empowered aspirational middle class, it has also come out in the capital market space. So DMAT accounts have increased 7 times from FY13 to FY24. We are now sitting at 14 crore, 15 crore DMAT accounts, of which it is said that more than 60 to 70% are unique DMAT accounts. Monthly SIPs have gone from 5,000 crores 7 years back to almost 17, 18, 20,000 crores now. So there is a a real data point that is visible in front of you, that this middle class is expanding very rapidly. And because this consumption is happening sort of under the radar, the increase is not really visible as such. I mean, it is just happening. It's like that, that river is continuously flowing, and we never come to know about it, how much volume has gone through. uh, this is also very evident in terms of the holdings of domestic companies in our stock markets, where the domestic investors has gone from 10% to nearly 17%, while the foreign investor has come down from 22% to 17.8%. So this money is continuously flowing into the market because there is money to invest. So can we say that we are at the point of Atmanirbhar Bharat and we don't need the foreign source of funds? No, we need the funds, we need the technology, but it is very critical to also note that right now also less than 5% of folks of Indian population invest in the stock market, compared to 13% in China, 33% in UK, and 60% in the US. Now, some people may say that, if you take out the poor and the poorest, this number may go to under 10%. Potentially, yes. But then again, I mean, you need to compare it to the like to like comparison with China also, and perhaps in UK as well. So there is significant room for India to grow forward. And where is this, this burgeoning demand coming at? Is services sector is basically contributing a huge chunk to this. So it is rising. It has risen from 50% 255% in FY25, and the services sector is growing at 8.3% right now, which is fueling the GDP growth. Now let's look at some charts from these sectors to really see what is happening. And if I see the Nifty Service Sector Index, it's up 300% from February 16 lows. And you can see the trajectory is reasonably steep. It has not seen the trajectory seen with many other sectors. It is just going up, up, up. The three core sectors which are comprising the services sector are IT, financial services, and telecom. Now let's look at the performance of these sectors. So IT also, you can see post COVID just continues to go up 350% up from lows. Financial services index up 375% from Feb 16 lows. Telecom index, which was slow in 2015 to 2020 period, has also picked up and gone up 200% from 16 lows. So top performing stocks within these sector spaces also, some of them have done really well. I mean, look at Tata Power, 5-year CAGR of 56%, Interglobe, 40% 5-year CAGR, Apollo Hospital, 37%, Shriram Finance, SBI, ICICI Bank, Adani Ports, Bharti Airtel, NTPC, Bajaj Finserv, all of them fantastic CAGRs of the last 5 years. Now the question is that were we able to identify trends in these sectors and stocks? These have already played well. What will happen next? How do you sort of look at which sectors are going to perform very well? Now, if we see the broader picture, the future of wealth in India, these are reports which say that currently where we are sitting here, somewhere here in terms of per capita GDP, US dollar terms, and we are somewhere near 2,800 to $3,000 per head. And this number will go towards 5,000 within 5 years. Just this move from 3,000 to 5 years is going to create a massive consumption boom. I mean, I'm not even talking about this 26,000 in 2047. Just this figure going from 3,000 to 5,000. Just imagine the number of people and the kind of discretionary spend that they will be doing in the next 5 years is going to be just phenomenal. It's the multiplier effect which our linear brains are not able to understand. So the future wealth drivers are going to be, perhaps trends like AI, IoT, green economy, space economy, etc. They will seem to take center stage. There will be probably huge trends in energy requirements, huge trends in real estate requirements as well. The conventional consumption items also should be doing very well, not just these future new age ones. And we are constantly leading towards advanced cities, thriving businesses, digitally connected citizens. That part will have to move up to satisfy the needs of these burgeoning new middle class. So how can we capitalize on all this? uh, See, we are very clear that buy and hold will not work here, because we are now living in an age of transformation, rapid growth, and possibly also disruption. So, if we are going to sit with the winners of the past, perhaps it will not work in the future, at least, not in high growth situations. So, lack of identification of trend formation, when are trends forming and when are they getting exhausted, it is going to prove very, very costly for most portfolios. If you look at last 20 years, the same companies, the same sectors are not going to be the best performers, and vice versa as well. So Nifty also, as you are seeing, is seeing the exit of traditional businesses. You are seeing entry of disruptive new age companies. You cannot remain isolated from that change. If the new age companies are becoming larger and larger, that is where you will also need to invest. And disruption is happening at a rapid pace, and investments also need to keep a adaptive, thought process to capitalize on that trends. And that is where sort of the trend following theme comes around, that you need to follow the trends and exit losing trends as you go ahead. Uh, this is another video that you can watch where if you miss the best days in the market, uh, you know where would you land up. Thank you so much for watching. Do like and share these videos. Do subscribe to the channel and let me know your comments. Thanks. Bye.